If you've ever wanted to start investing, but felt overwhelmed by brokerage accounts, ETFs, stock symbols, and account statements, this video is for you. Today, I'm going to walk you through how to open a Vanguard investor account, the most important features inside the platform, how to read your account statements, and most importantly, how to evaluate and choose the best ETF for your financial goals. By the end of this video, you'll know exactly how to go from having money sitting in a checking account to becoming a long-term investor. Let's get started.
So, why Vanguard? When people think about long-term investing, one name continually comes up: Vanguard. Vanguard built its reputation around low-cost investing and index funds. In fact, Vanguard's ETFs are among the largest and most widely owned investment products in the world. Recently, Vanguard's S&P 500 ETF, VOO, became the first ETF in history to exceed $1 trillion in assets.
The reason investors love Vanguard is simple. It's a nonprofit investment organization, so fees are considerably lower than other brokerages. Broad diversification, long-term focus, and easy-to-use investing tools. For beginners, it's one of the easiest places to start building wealth. As Diego mentioned earlier, our organization, Smart Society, utilizes the Vanguard platform for all of our investment activities. We do not receive any promotions, commissions, discounts, compensation, or other financial incentives from Vanguard. Our investment selections and diversification strategies are developed independently using the investment options available through the Vanguard platform.
Step 1 is creating your Vanguard account. On the Vanguard homepage, click Open an Account. You'll be asked what type of account you'd like to open. The most common choice is the individual brokerage account. This is a regular investment account. There are no contribution limits and no retirement restrictions. You can also choose the Roth IRA. You contribute after-tax money today, and qualified withdrawals are tax-free in retirement. Traditional IRA. You may receive tax benefits now, but you'll pay taxes when you withdraw funds later. For most young investors, a Roth IRA is often worth considering because of its potential tax advantages over decades of growth. Once you've selected your account type, Vanguard will ask for your name, address, social security number, employment information, and bank account information. After verifying your identity, you'll connect your bank account, which will give you the ability to easily transfer funds into your investment account. Once your account is funded, you'll land on your dashboard. There are 4 areas I pay attention to most. Portfolio value. This shows the total value of your investments. Holdings. This displays every ETF, mutual fund, or stock you own. Performance. This section tracks gains and losses over different time periods. Activity. Here you'll see purchases, deposits, dividend payments, and reinvestments or compounding. One feature I strongly recommend enabling is dividend reinvestment. Instead of you receiving dividends as cash, Vanguard automatically uses those payments to buy additional shares, helping compound your returns over time. This is the key to growing your wealth. Now for the account statement. You'll probably receive this statement in the mail as well. Many new investors open their first statement and immediately feel confused. Let's simplify it. There are 5 numbers you should focus on. Total account value. What your account was worth at the start of the statement period. Contributions. Money you've deposited. Investment gains or losses. How much your investments changed in value. Dividends. Cash distributions paid by your ETFs. Again, I strongly recommend enabling dividend reinvestment when opening your account. Vanguard will automatically use those payments to buy additional shares, helping compound your returns over time. This is the key to growing your wealth. Finally, the ending balance. The total value of your account at the end of the period. What matters most isn't whether your account was up or down this month. What matters is whether you're consistently contributing and staying invested. Successful investing is usually more about behavior than prediction. Now let's answer the question every new investor asks: how do I choose the right ETF? Instead of chasing the hottest ETF, I look at 4 criteria. Number 1, expense ratio. This is the annual fee charged by the fund. Lower is generally better. Many Vanguard ETFs charge only a few hundredths of a % annually. Number 2, diversification or the number of stocks. How many companies does the ETF own? For example, VOO tracks approximately 505 large companies. VTI owns thousands of U.S. companies. VXUS adds international exposure. Number 3. Historical performance. Past performance doesn't guarantee future results, but it helps you understand how the fund behaves through different market environments. If you're just starting your investing journey, here are 3 categories many long-term investors begin with. VOO, Vanguard S&P 500 ETF. Tracks 500 of America's largest companies. VTI Vanguard Total Stock Market ETF provides exposure to nearly the entire U.S. stock market. VXUS, Vanguard Total International Stock ETF, adds diversification outside the United States. And that's it. But remember, don't choose an ETF because someone on the internet says it's the best. Choose an ETF because it aligns with your goals and investment strategy.
Today, you've learned how to open a Vanguard account, how to navigate the platform, how to read account statements, and how to evaluate ETFs like an investor instead of a speculator. The most important step isn't finding the perfect ETF. It's getting started. Even small contributions made consistently over time can grow into substantial wealth through compound growth and disciplined investing. If you found this helpful, subscribe to the Smart Society. Join us as we build a community of young minds. We'll see you in the next video.